Question number 14. A. States two reasons for maintaining a petty cash book. So we usually record all the small cash transactions in petty cash book. So the reasons might be to monitor and control our expenses. Okay, and we can write the basic reason to record small cash transaction. Next part. Johnny maintains a petty cash book with a float of 150. That means Johnny will have 150 in his petty cash balance. And let's read the requirement first. Prepare the petty cash book for the month end 31st January 2019 and balance the petty cash book on that date and bring the balance down on 1st February 2019. So we need to prepare the petty cash book. Okay, so our float is 150, so our petty cash will start with a balance of 150. Okay, so 1st Jan balance BD 150. This is the receipt sides, and now we need to enter all the transactions. 2. Postage and stamps 11.5, so it will be on the credit side. 2nd Jan, it's postage and stamps. It's 11. Voucher number 101, payment is 11.5, and it will be under the category of postage. Next, number 8, voucher 102, travel expense to sales manager. Okay, so 8 Jan, so it's travel expense to sales manager, given to sales manager. Voucher 102, amount is 22.5, and it will be under the heading of travel manager. It will be under the heading of, and it will be under the heading of travel. Next, 15 Jan, voucher 103, paid to John. He is a trade payable 35. Okay, 15 Jan, paid to John, voucher 103, amount is 35, and it will be under the category of ledger accounts. 22nd Jan, voucher 104, purchase coffee, tea and sugar 17.75. Okay, 22 Jan, coffee, tea and sugar. So voucher number 104, and it's 17.75, and it will be under the category of refreshments. 2631, both of these are expenses. Purchase of postage stamp 8.5 and paid cleaners wages 15. Okay, it's 26 Jan. Again, postage stamp voucher 105, amount was 8.5, and it will be under the heading of or category of 8.5 postage. Next was 31st Jan, cleaners wages 106, it was 15, so it will be under the category of cleaning. Next, 31st Jan, restored the float. Okay, so on 31st Jan you restored the float, and you must restore the amount that you have already spent. So we have to sum up these columns. Okay, the sum of this column is 110.25. This one is 15, and this one is 20. This one is 17.75, and this one is 22.5, and this one is 35. So we need to restore only this amount. If we restore 110.25, then our balance will be back to 150 again. Okay, so we will restore this amount from the cash book on 31st January. So from cash book we are bringing the balance, so it is 110.25, and as a result on 31st January our balance CD will be again on the credit side 150, and total will be 260.25, 260.25, and our balance BD on 1st February will be 150 again. Okay, next, state which accounting concept has not been applied in each scenario. Scenario 1, Johnny charged a private lunch to refreshments in the petty cash book. So he is charging his private expense to the business expense. That means he is not recording the items separately, so he is not applying the business entity concept. Johnny purchased a new sweeping brush for 10 and charged it to the non-current asset. Okay, so the sweeping brush cost is only $10, and this is a very insignificant amount to the total value of the company's equity. So it is very unlikely and illogical to record these $10 as a non-current asset, because the depreciation that you will charge will be very low, and therefore it will be not under the non-current asset, it must be in the expense. So it is an immaterial thing. Therefore, by recording this $10 as a non-current asset, we are not applying materiality